Hello, everybody. Today we are looking at Conscient Habitat 102, an affordable housing project in Sector 102, right on Dwarka Expressway corridor in Gurgaon. I want to flag up front that this deck carries two different recommendations depending on which side of the transaction our client sits on. Let's walk through exactly why. And also, this is valid only for the period from August 2026 and might change as the conditions evolve. First and foremost, let's start with the headline. For original allottees, our call is a strong hold. For anyone looking to buy into Habitat 102 on the secondary market right now, our call is to avoid it. Three things drive that split. First, the arbitrage that made this such a good early investment has closed. The implied price per square foot today is basically identical to the open market average for Sector 102. Second, the rental yield has collapsed for anyone buying it now from the 7 to 10% range down to about 2.4% gross. And third, the same 5-year lock in under the Haryana affordable housing policy that protected early buyers now creates a legal risk for anyone trying to buy in today because you can't get a registered title or a bank loan. The ask is simple: confirm the hold guidance for our allottee clients and steer new capital away from the specific opportunity. Which brings me to the next part. Here is where the numbers ground this. A two-bedroom unit that was allotted in February 2022 for about 26 lakh 42,000 rupees is now listing between roughly 80 lakh and 95 lakh rupees. That's a total return north of 200%, working out to a compound annual growth rate of 28 to 33% over 4.5 years. Three-bedroom unit shows a similar pattern. This is genuinely remarkable outcome for people who got in at the original allotment prices. Now, here is the comparison. The same affordable housing policy that fixed the launch price also comes with a mandatory 5-year lock in after possession, and the lock in doesn't expire until around 2031. During that window, the builder legally cannot register a sale. So anyone buying today has to go through the general power of attorney structure instead of a proper sale deed. The Supreme Court has ruled repeatedly, most notably in Suraj Lamp versus State of Haryana, that the GPA arrangement does not cover real ownership. On top of that, banks won't finance a purchase without a registered title. So buyers have to pay entirely in cash. And if the seller disputes the arrangement or passes away during the lock in, the buyer is looking at uh, contested litigation with no guarantee, absolutely no guarantee of winning. Let's look at the pricing evidence more closely. The whole reason Habitat 102 outperformed was that it launched at an artificially low government cap price. The gap has now closed entirely. The implied rates on today's asking prices, about 13,220 rupees per square foot, is essentially identical to 13,050 rupees average across Sector 102's free market apartments. And when you compare Habitat 102's 27.8% CAGR against the broader Sector 102 apartment index at 16.4%, you can see the outperformance, you know, uh, uh, came from the artificial discount at launch, not from anything unique about the project. The discount is, as of date, I would say, all gone. The yield picture sort of tells the same story from a different angle. An original lottee who paid 26 lakh 42,000 rupees now collects 16,000 rupees a month in rent, uh, which sort of yielding a 7.3% on its original cost and even higher for three-bedroom units. But a new buyer paying at 80 lakh rupees as of date, which is perhaps at the lower end for the exact same unit, and collecting the exact same rent is only earning 2.5% gross. And once you account for maintenance, taxes, and vacancy, the net figure drops to as low as 1.5%. That's below what you did get for a risk-free government bond. One honest caveat here, rents can move, but the gap is wide enough that this conclusion is not sensitive to small changes in rental related assumptions. Bringing me to the next part. For a prospective buyer today, we see three realistic paths, and I want to be upfront that this specific table was constructed by us for decision purpose. It's not lifted directly from the report. Well, part one is buying now through a GPA, which gets you in at today's price, but with an unregistered title, no financing, at a 2.4% yield. Part two is waiting until 2031 for the lock in to clear, which solves the legal problem but leaves capital idle in the meantime. Part three is redeploying that capital into a free market alternative in the same corridor where you get a clean, immediately registrable title and standard banking finance. On balance, part three is the one we did recommend to a client with, say, fresh sort of capital in this particular market. Putting it all together, if the client already owns the unit, the recommendation is a strong, strong hold. Lease it out, capture the 7 to 10% yield on their original cost, and wait for the lock-in to expire so they can sell it with a clean title and a liquidity premium down the line. If the client is looking to deploy new capital, the recommendation is to avoid Habitat 102 altogether. The appreciation runway is gone, the yield is punitive, and the legal risk from a GPA purchase is not one we did want a client carrying. Redirecting the capital towards ROF, perhaps, you know, Alias, which is their new project, which is cheaper in the same sector, or towards free market inventory elsewhere on the corridor, could be much more helpful. Yes, you will not get things in similar price segment, but you would get access to significant financing, which you'll not get as of today. Going on to the next part. Well, for a lottee clients, the plan is straightforward. Confirm the hold now, get the rental listing live, make sure there is sort of a functioning resident welfare association given how dense the project is, and then hold through to around 2031 when the title clears. For investor clients, the plan is to decline any Habitat 102 opportunity that came across the desk, start screening ROF alias and other clear title alternatives in the same sector, such as Joyville, perhaps also Adari, Oyster Grand, etc. And for clients with larger budgets, perhaps look at premium free market stock elsewhere on the expressway all around, right? So here is the that's the analysis. Lexora has done similar buyer decision work for DLF Garden City Enclave, Godrej Nature Plus, and Joyville, along with the broader affordable housing and compliance advisory across the Gurugram corridor. Happy to take any questions, and our contact details are on the screen. If you would like a personalized review for your own portfolio or your projects, please feel free to WhatsApp us or drop us an email, and we will support you wherever required. Thank you for being so patient, and have a wonderful, wonderful day. Thank you.